Good morning everyone and welcome back to Morning Markets on Wednesday the 10th of May. Today we're going to be discussing the US debt ceiling and preparing ahead of today's US CPI print. So we'll start with US inflation. So at lunchtime today we'll get the inflation print for the month of April. Markets are expecting no change in the pace of inflation, so that headline inflation and core inflation in the US would remain around 5%. Now, if we were to see a slightly higher inflation print than markets expect, asset prices may react negatively as they would try and extrapolate through a slightly firmer, more hawkish message from Fed officials on the back of a strong jobs report, which our Chief Investment Officer, Jeff Casson, spoke with you about yesterday. However, if we were to see a slight miss, so that is a slightly softer inflation print, the markets would likely extrapolate through again, expecting more rate cuts in the US towards the back end of the year. And this would likely boost asset prices such as equity prices again in the short run, as markets really feel the fever of disinflation prints building in the US. That is lower price pressures way ahead of what we're seeing in either the UK or in Eurozone. And this would actually be really good for activity because it would show that there's less pressure on the US consumer there. They're not seeing the same price pressures in commodities such as we're seeing in the UK or the Eurozone, but a broader disinflation in the US can only be a positive thing for markets. Now, what's dominating markets elsewhere, apart from the focus on central banks and inflation, is the US debt ceiling. Now, this is an act of Congress which has been around for over 100 years, which effectively stops governments from borrowing too much. If they wish to exceed the debt ceiling, then you need a new bill to go through both houses of Congress in the US, such that the government can continue borrowing to finance federal spending and indeed the fiscal deficit which the Biden administration is currently running. So right now, the government in the US actually reached the debt limit at the start of the year. So the way that they're financing government spending today is they are spending down the over-borrowing from 2022. The government borrowed an excess of around $1 trillion above what they needed last year. So far, they've spent down around $700 billion of that. So this account that they're running is now close to empty, such that by the start of June, technically, the US government will have run out of money if the debt ceiling hasn't been raised. Now, the debt ceiling has been raised many times over the years, but usually there is some brinksmanship because it involves a Republican-controlled House of Representatives and a Democratic president. The Republicans want to see some spending restraint before they're willing to raise the debt ceiling, whereas the Democrats would like spending just to continue as it is to help finance acts such as the Inflation Reduction Act. So right now, both sides appear to be at an impasse and they're unwilling to budge, but this really comes into sharper focus in early June when, if things continue as they are, US bills which are due for maturity and repayment, well, the government wouldn't have the money to pay those back. So we'll watch the government actions closely and see if they continue to negotiate with Republicans. That's all for today, but please join us tomorrow where colleagues will update you on the US inflation print. Thank you.